Well, hello everyone. Welcome back to the Schneider Downs Market Commentary with my colleague Sean McCann. Sean, welcome back.
Thank you for having me again.
Yeah, we have a lot to go over, but we would be remiss if we didn't start this with somewhat of a sobering commentary on what happened over the weekend. There was an assassination attempt on the life of Donald Trump. Unfortunately, one person, Corey Comparatori, a fire chief in Buffalo Township, lost his life, died a hero, covering up his family from the bullets, and just a truly awful situation. And we pray for his family. We're very thankful that President Trump is recovering out on what could have been a truly tragic event. And so our thoughts and prayers are with everybody that was at the rally, with the Trump family, with President Trump and his family, and then certainly with Corey Comparatori and his family. We'll be thinking about them in the days and weeks ahead.
Yeah.
Moving on to somewhat of a brighter note. Capital markets finished the first half of the year in good shape, and I think that there was a lot of give and take. Some things that we've seen before, and then some things that we really haven't seen in a while. We're going to walk you through a lot of what occurred in the second quarter. But I think the two main themes that we talk about in the letter. One, baseball, starting out with the fact that my love and affection for the game did not match my abilities, which made me an early exiter from youth baseball, but created a lifelong fan. One of the things that my favorite quote on the baseball front was, talk to me after the All-Star game. And really that was meant to kind of tamp down the enthusiasm of teams that maybe got off to a hot start or maybe surprised some people. But baseball is a long season, right? The All-Star game comes about 60% of the way in, and it's just a way of saying, like, hey, slow down, like, come talk to me, right? So yeah. I think we're at a really critical point in time, and what happened in the second quarter led to some pretty interesting questions that could be answered in the third quarter, and I think will be answered in the third quarter. And I think what is shaping up to be, right, the equivalent of talk to me after the All-Star break is, I think, talk to me after the third quarter. Mm-hmm. We'll see where markets are going to go, because it's a really interesting setup. And so that was one of the themes, and the other was this idea of momentum, right, and kind of Sir Isaac Newton gets the lion's share of the credit for the theory and the mathematical equation around momentum. I think what's less understood is the philosopher and scientist René Descartes really tried to set out to mathematically prove this idea of momentum, right? How that worked, and I think it's when I sat down to kind of write this article where you saw the S&P 500 powered by the Magnificent Seven stocks. Again, that's kind of the similarities that we saw carry over from the first quarter. Really start to really power markets up, and you had the S&P 500 up, a little bit over 4.25%, and then you had the equal weight S&P 500 index down 2.7%.
Yep.
Right. So then you see a lot of Bloomberg, CNBC, Investor Business Daily, all talking about these tech stocks, and I think that there are some investors out there that thought that this was somewhat of a new phenomenon. And what I talk about in the letter is that the golden age of the internet, the late 90s, really put the foundation for what this AI revolution has been, both in terms of markets and the science coming out of it. And Apple, Amazon, Google, Facebook, Microsoft, people can kind of forget there was the groundwork laid for AI, and it was really seen in markets in the late 90s, kind of laying the foundation. So I kind of kept going back to this idea of the Mag 7 are surely kind of changing things in the way that Newton's second law kind of proved out the momentum statement. But the groundwork was laid by this other group of stocks, kind of like the Descartes of financial markets. So the quarter was very interesting. What changed in terms of broad equity markets was that the strongest asset class of the major equity asset classes was emerging markets. It returned 5%. It actually was positive. International developed negative, small caps negative, mid caps negative. You had the S&P 500 powered by 7 stocks positive, and then you had emerging markets. And it was this idea of, hey, talk to me after the All-Star break. because there were certain things that would have to happen for this market to really continue to move forward. And so I want to leave that there and transition to you, Sean, to talk about, the setup and why we thought the third quarter was going to be so important for capital markets and client portfolios.
Yeah, and I think if you take what happened last week as an example of what we might see in the third quarter, maybe the second half of the year, last Thursday we got a deflationary inflation reading, basically meaning another signal that inflation is coming down. And in reaction to that, we saw rates come down, so we saw bonds perform quite well. But then on the equity side, interestingly enough, we saw big tech, software, semis, Mag 7 names really sell off. I believe Tesla was down over 5%. Nvidia was another one that was down quite materially. But all that cash or all those funds kind of flowed from the big tech into value names that, real estate perform really well, financials perform really well. And then on the smaller side, small cap equities perform really well, which we've kind of talked about for the last 2 quarters or so, is an expectation that we thought might happen if rates start to fall, as I think these small cap names are much more impacted by lower rates or the interest rate environment. But small cap names perform really, really well. In fact, I think small caps are up over 3% on Thursday.
Yeah, and I think it's like this idea of the coiled spring, which is that it's almost, we don't even need to see the interest rate cut, but just the expectations of interest rates going down. And this is all to say that this is 5 to 7 days, right? And we don't know, but we don't know if it's going to see a follow through, because we've seen kind of fits and starts where small cap and value will do well, and then you go back to the same 5, 6, 7 names. And I think what's important here is that we had material. You talked about last week. We had a material outperformance in one day where you saw the Russell 2000 outperform the Russell 1000. So the 2,000 smallest stocks outperformed the 1,000 biggest stocks by over 3%. That's happened a handful of days. Typically tends to signify very good things for markets. Again, past isn't always prologue, but we look at this, and we've written a lot about the market needing to broaden out. The narrower and narrower the expectation, or the bands that are really moving this market forward, what it exposes you to is one of those, get the very good as the enemy of great quarters by one of these big names. Then all of a sudden you have the S&P 500, which isn't nearly as diversified as I think it has been historically, given where market caps have moved, and you leave yourself open to that, to the great expectations game, which is a really interesting segue. And so kind of Barron's put out their roundtable, which is sitting right here. What is different than previous years was that there are a lot more value names in here, right? Value stocks, value funds, some fixed income funds, some international stock picks. And in the analogy that we talked about, baseball is the one American sport that is probably most aligned with capital markets and investing. You can swing through the fences, try to hit home runs, and sometimes the bat's going to find the ball is going to go a far away. You're going to put runs together. But over a 162 game season, you have to take what pitchers give you. You have to play good defense, and you do that enough. You stack runs. You put a bunch of quality games together. That tends to be what makes you a contender versus a pretender, right? And where we're looking at in client portfolios is we want to take what the pitcher is giving us. Sometimes that means laying off some pitches that maybe look attractive but are going to dive down, or taking looks at the pitches that are just going to go really fast and are really hard to hit. Plate discipline is something that for those of us that really enjoy watching baseball is super fun to watch, where you have a batter, works a count, and then he ends up getting the good pitch that he gets to hit. I think that's what we've really tried to do over the course of, I would say, coming out of COVID, the big ramp up after the stimulus, the really good year in 2021, 2022 obviously being a down year, but there's some things that we did from a diversification standpoint that helped blunt some of that volatility downward, all throughout maintaining that diversification is our friend, and it helps us combat this narrowing market, and we started to see that market broaden out. But the idea of being disciplined, treating this as a 162 game season rather than like a 3 game series or a 4 game series, that's where I think that this idea of diversification really comes in. And you have talked a lot about international markets. Maybe talk about some of the international things that are happening in the international markets that not only provide a really good absolute performance, but also give us good diversification from the technology-heavy S&P 500.
When I think about international markets, one of the most surprising facts I like to pull out is if you actually look at the top 50 names across the whole world, over half of them are actually coming from international markets, believe it or not, even though we've got the Mag 7 back here at home. But from like a more thematic standpoint, what we're seeing, for example, in Europe is earnings are actually becoming a lot more resilient than what we previously expected. So we're seeing strong earnings growth on that side. In Asia, we're still seeing really strong fund flows into Japan because we've talked about it a little bit last quarter, 2 quarters ago. We're seeing some reform throughout Japanese financial markets, which is increasing shareholder value there. There's a lot of different themes throughout international markets that have kind of led to being tailwinds, and it kind of led to us being very constructive on that side of the equity platform.
Yeah, I think, what's really exciting is to see, emerging markets, have this kind of strong quarter, and that's the one thing that I think was surprising when you go back and you deconstruct the quarter, is that we knew that technology had a really strong June, and that pushed markets. Certainly pushed the S&P 500 into the positive territory, but emerging markets like India and Korea and Taiwan are now big enough, both from their own country's market capitalizations of their stock markets, but also in the companies that they have. The issues that are the very real issues that are coming out of China, when you think about the real estate issues and kind of the debt around some of their real estate, both residential and commercial. 5 or 6 years ago, these economies weren't big enough to do that. In a couple ones, we're going to pull some out. You look at NVIDIA designs these semiconductor chips. Taiwan Semiconductor makes the chips.
Yeah.
Then you look at, there's a whole host of things going on, exciting things going on in the Indian economy that are truly exciting. And you look at it, and emerging markets have never been more of a diverse opportunity set. Valuations are very compelling, and historically speaking, they have been benefactors from a lower interest rate environment in the United States. Another area that has outperformed the last couple of weeks going in, the first couple of weeks of the third quarter, and a part of that broadening out of the market that you're looking for to sustain these bull markets, right? If we're going to get the soft landing here, if we're able to kind of engineer soft landings, and the European Central Bank cut their interest rates.
They've already started,
Yeah, they were the first ones to start. They cut by a quarter point. Again, if you're looking at reasons to own international stocks, they're now ahead of the interest rate curve, right? They're cutting interest rates. The composition of their indexes are less tech heavy, another valuable diversification tool. They pay higher dividend yields. So there are these reasons that you like holding and investing in international markets, valuations, monetary policy, different constituents, different companies really moving markets over there. And I think it's just it's an important time to remember that diversification is your friend, especially as markets get more concentrated. It's tempting to keep swinging at the fastballs, right? To keep swinging. Sooner or later, they throw you a curveball, and you've got to be prepared to hit it.
Yeah, I think that diversification is a lot less attractive on the way up, right? When we've seen NVIDIA, I think NVIDIA's up over 150% year to date. And when that's carrying the market, it's very easy to get lured into just kind of following that trend. And I think diversification really starts to benefit when we're going the opposite direction.
And I think too, it's not to say that these top tech stocks have to retreat and have to have negative performance for diversification to come in. They could just underperform the broader market.
Right.
They could. And
like we saw last week.
And it's not to say that you still need to have exposure to them because they have high market share. In some cases, they have oligopoly or almost monopolies on things. In the case of like NVIDIA, in terms of their market share, you want to have exposure there. But there's also this idea of, hey, they can underperform because they've been outperforming for so long.
And the expectations are so high now.
High, whereas the expectations for value stocks, small and mid-cap stocks, international developed and emerging markets, they have the ability of having almost no expectations.
Yeah.
So when they surprise, they can then become the beneficiaries of some momentum, right? Because they get the ball rolling down the hill, and all of a sudden it starts to catch up speed. And so I think that's really what we're observing. On the fixed income side, yields still look attractive. We saw rates have been pretty volatile in terms of moving up and down. We started the year at 3.7, about 3.8% 10-year Treasury yield. It got up to as high as 4.5%, and it's kind of steadily drifted back down. I think before we came in here to tape this, it was right around 4.2%.
Yep.
On the 10-year. When you look at all of the information coming in, we don't know when the interest rates cut will happen, but all signs point to the next action taken by the Fed is going to be an interest rate cut, which again benefits a lot of these other companies and not maybe less so some of these mega cap technology. Wanted to wrap this up with a story of baseball and fandom. And my oldest daughter Caroline, who turned 9 on Sunday the 14th, is a diehard Pirates fan. We took her to our first game of the year against the Mets on a Sunday. The Pirates were down 1-0. They got the bases loaded, and Nick Gonzalez hit a shot into left field, and the Pirates went up 2-1. And I've never seen my daughter so excited. And then in the 9th inning, the Pirates couldn't hold the lead. And I looked at my wife after the game, and I said, my upbringing as a Cleveland Browns fan is uniquely suited for these moments of absolute devastation and disappointment, because I truly think Caroline thought that was going to be the end of the world. We've since bought tickets to more games, and we were hoping that the Buccos begin to turn it around and continue to catch take the momentum they got from the last week and get it in. But we're going to end it on a high note. We started this on a somber note. Going to end it on a high note. Sean, as always, it's really good to see you. And for those clients, prospects, friends of the firm, would love to talk to you about why we think, see you after the All-Star break. Talk to me after the All-Star break. This year is going to be talk to me after the third quarter. So if you want to learn more about where we're seeing things going, we'd love to have that conversation. Please reach out to your Schneider Downs contact, and we'll make sure that it happens. Until then, until we tape the third quarter, Sean,
Next
it's
one.
good to see you, bud.
You too.
Take care. Bye.